Direct investing. This is your educational one-stop shop for in-depth market analysis, investment insights that boost your trading potential. Coming up, markets brushing off tariff pressure as Washington delays deadlines, signals some wiggle room for trade partners who are willing to deal. Plus, is the US dollar poised for a rebound? We're going to break that down in today's technical take. And Palantir up more than 80% this year. A lot of artificial intelligence buzz around this name and defense deals. Is it the next enterprise tech giant or a hype-fueled bubble waiting to pop? Don't miss this week's trading debaters go head-to-head on Palantir. That's all ahead. You're watching TD Active Trader Live. Get you updated on the markets. We'll start with the S&P 500, just dancing on the break-even line. Pulled back yesterday on all the tariff concerns from recent all-time highs, though, so we're not that far off of the all-time highs. And right now, the market's just trying to decide which direction to move. And as we said, there could be some deal-making still to come with the can kicked down to August 1st, perhaps even later for others who are willing to speak. We just don't know. The market doesn't know either, so it's just trying to figure it out. Let's jump into the heat map. I want to see where the push and pull is right now. You can see you got a mixed bag over in the technology space. Oracle's getting a bid, but the other ones aren't doing all that much for us. Financial services, I want to hone in on some of these names like Bank of America, Wells Fargo, JPM. We use Bank of America as the example. We're getting bank earnings. I think Bank of America is next week. We've got analysts at HSBC getting a little cautious on several of these names, including JP Morgan, Goldman Sachs, and Bank of America. It's not about the fundamentals. The argument there is that the fundamentals are sound. It's the valuations. These banks have had a pretty strong run since the April lows and perhaps getting a little ahead of their skis. Of course, they're barometers of the economy, so when they do start reporting, we want to hear what they think about where the U.S. economy is headed amid all this trade turmoil. Sunrun, want to check in on some of these solar panel stocks, whether it's Sunrun, which we'll show you here, is down about 7-8% the last time I checked. Enphase, First Solar. Another executive order coming out of the White House calling for the rollback of green energy subsidies, and that is hitting the space. This morning, Sunrun down about 7-8% the last time I checked. The other one's sort of lagging a little in behind it. And that's your market update. Joining us now for a more technical take on what is happening in the markets is Hiran Amin, and for the first time on the show, Matt Dempshinson from our direct investing educational team. Hiran, welcome back. Matt, welcome to the show. It's great to have you here.
Thanks a lot, Greg. Appreciate it.
All right, so we got a few things we want to go through. The U.S. dollar. What a story here. People are just trying to figure out, and this is important for people's portfolios. What is the direction of the U.S. buck? What are we seeing from the charts?
Yeah, so let's talk about that, Greg. So the Dixie, the dollar sign DXY is the symbol on Active Trader that we got pulled up here right now. We've seen the last couple of days, I've got the daily chart pulled up over here. We've got 5 days of green candles that have shown up here. So we're seeing it obviously kicked off this week starting higher. This is supported by safe haven flows amid tariff fears. Again, we know the conversation is back in the limelight. And then there's fading expectations of near-term, Fed rate cuts for the July meeting that's set for. Also, going back to the tariffs, there's the U.S. is set to formally, issue notifications to over 100 countries by July 9th is what they're going to do about, potentially what the new tariffs are going to be. Some of them can be as high as 70%, and that's going to kick in on August 1st here. Now, what you also have at the same time that could be causing pressure to the dollar is the yield curves. If we look at the 2- and 10-year yield curves, they do point to sort of moderate economic growth, and that also means that it reduces the dollar's appeal as a safe haven itself. Now, combined with sort of low risk aversion in the markets and in an environment that fears alternative currencies, you've seen this pressure cause the dollar to drop to the lowest levels in, actually, this is the month of June. It dropped 10.7%, which in fact was the lowest through June since first half of 1973.
Really?
So this is dating that far back. Also, on top of that, this is the largest, steepest drop, 6-month drop in over 50 years as well. So quite significant over here. We're seeing this falling wedge pattern, which I'm going to point everyone to. Now, the key was, we saw it broke below that wedge pattern. It's just actually broken above it again. Now, the 2 moving averages I have are the 9, which is just the 9 EMA, which is this blue line right here, which is just broken above. And then we've got the 21-day moving average in the yellow there. It hasn't captured that yet. But there's a little bit of momentum building up coming in here. The key level, that's also the support, which is a 97.50. It's looking to break above that. So if we can see a break above that, tag the 21-day EMA, we could start seeing this kind of as the support and maybe inching towards the key liquidity zone. So that'll be the key to watch out for. It's this 97.50 holding that line here, and then possibly pushing up closer towards that 100 level, which is the sort of the next overhang that's on the dollar. So this will be over the coming week. I think we should see some strength coming into it, but over the summer months, we should still see it trying to tag up to that 100 level. See a bit more support coming in there.
All right, that's an important one to watch. When we talk about the markets, the S&P 500 is the easy big U.S. benchmark.
Yeah.
Sometimes we forget about the Russell, the 2,000, the 3,000. You're looking at the Russell 3,000.
I'm looking at the 3,000 in this case. Yeah, I know like a while back we covered the S&P 1500. In this case, we're covering the Russell 3000, which is sort of a combo between the 1,000 and 2,000, the large cap and the small caps here. In fact, nice comparison that you mentioned. The S&P 500 really represents about 80% of the large cap U.S. companies, and the Russell 3000 represents about 96%. So this is really a barometer of the U.S. markets in its entirety when we talk about large, mid cap, small cap, and even certain micro cap companies as well here. Mainly led the performance, if you map it up against the S&P, they're sort of very similar in performance. IT holds the bigger weighting in this, so they account for about 30.7%, and then financials come in at 14.7%, and then it gets smaller and smaller from there. But the big theme that I wanted to focus on was this idea of the meme stocks and YOLO bets. It seems to be on again. Companies, for those who are not familiar, these are companies, the money-losing companies is what I should say. They're starting to get more favor, or with investors speculating on them. Like it was back in 2021, if you remember, when we had 0% interest rates, and we also had governments
to trade.
Yeah,
and a little bit of money coming through the door.
And you had governments that were fueling this with the stimuli, juicing this market rally. So in fact, out of 14 companies that I looked at in the Russell 3000 index that have more than tripled since the April 8th lows, 10 of them don't generate any profits whatsoever. Wow. Now, the other fact is, through late June, 858 companies in the Russell 3000 have no earnings, but they've posted an average gain of 36%, which is outperforming even profitable peers as well there. So what we're seeing is the strong, channel. When we look at the charts, it's still in this bullish intermediate trend over here. It's broken above this key level, which was a previous high that it had captured back in sort of late February. And we're going into a price discovery point now, where we've hit this high, 35.75. From here, we don't have a high at this point, but it is kind of resisting and coming back down to this 35.51. The key level that I'm looking at is this consolidation area. If it tags this sort of lower channel, it could break down further, and we could tag the 50-day EMA. There's also a significant gap down that has formed here, or gap up, I should say, that hasn't been filled as of yet, and that's at the 32.50 level. So that's a 200-point drop approximately. So represents about, you're looking at about roughly just under 10% of a move potentially that could happen anytime between now and maybe the end of the summer or early fall there. So this is one to keep an eye on, and we'll just as a gauge to see how that risk appetite unfolds there with some of these sort of these meme stocks that we have.
Right, interesting stuff. Matt, my phone keeps trying to sell me stuff, or a very specific app on my phone. Yes. Some sort of events going on with Amazon?
Well, yeah, if you haven't been burying your head in the sand and you've got a mobile device, you've probably received a notification that Amazon Prime Days, and the stock looks like it might be primed to make a big move. If you look at the chart over here, we've got a 50 and a 200-day moving average, and they're looking to start crossing. So that's a pretty good signal to upside. And if we do get some breakout from this range here, that is kind of consolidation after a recent move up out of a breakout, with some significant volume, we could have some perfect storm kind of happening here. And the hype with Prime Days, everyone buying things. They could just start fueling it. You could get people who are in the retail space just jumping in and buying some stock, so that could drive the stock higher as well. And if it breaks out, we're looking at the previous highs around $242 to get us back there. So yeah, there's a lot of different things pointing in the upward direction. We'll have to see if the next few days kind of track, and early numbers that we get in. I know sometimes they'll get some numbers in towards the end of the week, and they'll announce some previous things. But if we get some juicy numbers, that could spice it up a little bit.
That'll be one to watch. As we speak, there should be guys with sledgehammers smashing my bathroom to pieces. And Amazon even sells vanities because you got to go out and buy all the stuff. It's like, my wife's like, look at this. They're not going to sell bathroom vanities. Apparently they sell that too. So who knows? Maybe you'll get my money as well. Thanks for that, gentlemen. If you at home have a question for our team, here's how you can get in touch with us. Just email td.activetraderlive@td.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It's going to take you to our TD Active Trader Live website, where you can try the TD Active Trader platform risk-free. Just open a practice account. You click on Try TD Active Trader, that little button right there. All right, the main event, trading, debating. It is time. This week, the stock in the spotlight is Palantir Technologies, a U.S. software company that builds powerful tools to help governments and businesses make sense of large, complex data. Before we get going with the debate, just a reminder to our viewers, the securities and strategies discussed on our show for educational purposes only should not be considered investment advice or buy, sell, or hold recommendations. Options trading carries high risk, may not suit all investors. Significant losses are possible, so it's important to assess your own risk tolerance. Make sure you do your own due diligence before engaging in trading. Let's get back to it, gentlemen. Palantir Technologies, what made us pick this one to debate here?
Well, Greg, if you're an investor, you've probably heard about Palantir.
You may have noticed, yeah.
It's been a darling of the market. It had a storied run in 2024. I think it was 450% is the total return it had in that year, tracking close to about 100% so far this year. I think we're about 80, as you mentioned. Storied history. They was founded back in 2003 by Peter Thiel. He was actually the co-founder of PayPal and then started this up. And one of the sort of things we talk about was the naming of Peter Thiel. He's obviously a fan of J.R.R. Tolkien, Lord of the Rings, right?
Palantir, right? The Seeing Stones, right?
The Seeing Stones, exactly. So this is obviously a company that we have that's been in the spotlight, and we just want to really parse into some of the peel back through the financials and see what the companies how are performing.
Okay, interesting stuff. So we'll get the time on the clock. This is Matt's first time with us. I think they've explained the rules beforehand. You get the 2.5 minutes to debate clean. You get a few
it goes back quick, Matt.
minutes to fight it out. Then we'll get into the platform. But first things first, we'll get that time on the clock. And I think as we always draw from a hat. So Matt, lucky Matt, got the bull case. Why don't you kick things off for us?
Cool, thanks a lot. So yeah, Palantir. It's not just a company that's riding the hype train. A lot of people are saying that it's leading the hype train. It's got a lot of different things going for it. I think of it as a triple threat. They've got leading technology that they've been able to integrate into a lot of different services for companies. They have the impressive revenues. Like if you look at their numbers, crazy revenues going through the last little bit. Their annual growth is around 28.7% on average in the last 5 years, which is pretty phenomenal if you're looking for a growth company. And they're powerful partnerships. Like they're industry leaders in terms of making deals with the governments, contracts, and like the big beautiful bill that Hiran mentioned earlier. That just opens the doors for more of that. Obviously, a lot of the revenues previously were coming through defense contracts and working with the government, but they have expanded into the commercial space now. And in the last year or two, they've expanded that customer base, and I think that's going to be opening the doors for them even more. So like they have the government funding, they have the commercial money coming in, so it's primed for the situation long term, potentially to have continue this epic run it's been having. Now in terms of the charts, like if you look at this chart, like it's pretty phenomenal. Like you said, in terms of like the last 5 years, up 407%. I want to focus in a little bit more in the short term. So if we look in here, we've got a low here on April that it dropped down all the way back to $60. And then since then, it's been this like epic run. We've popped up to a high of $148. And since then, we've kind of slowed off. This is a weekly chart, so you're seeing a little bit more broader, slower movement. But the Keller channel that I have on here, which kind of measures the price of the action and moving averages and how much volatility is, you can see it's riding the top of this Keller channel, and that typically is signifying a bullish kind of trend that we're having here. And some of the studies I have at the bottom here will kind of reinforce that as well. We've got this relative volatility index here. So this is a pretty volatile stock, a high flyer. It will move. News will drive it to up or down. And momentum right now is on the high side, so you can see it's towards the top of the range. And that just kind of coincides with this trend. So it's riding this trend up. And the trend is your friend. You don't necessarily want to buck it. I know recently in the last little bit, we've had a drop significantly. If we look here since early July.
There you go, timed out. And you even gave him a little bit as a lead into his case. You're
I
a
did,
very
yeah.
generous debater there, here, and so
Ease him into it, Greg.
Yes, sir.
there's the bear. There's the bull. What's the bear saying?
All right, the bear says, I've been tasked with obviously the mammoth task of being the contrarian on this company. One thing I want to start by saying, Palantir Technologies, a company so secretive that what it actually does, or what is, even its employees need its own security clearance to figure out what their job descriptions are. It's very complicated. We have a business that has somehow convinced investors to pay a hefty premium for prices of essentially what is Excel spreadsheets with goth aesthetics and a Lord of the Rings naming convention. Yes, nothing says cutting edge AI quite like naming your company after a mystical orb that corrupts everyone who uses it. Truly inspiring for a data analytics firm. But on the number side, let's talk about the evaluation. That's what I'm going to start my argument with. When you talk about price to sales ratio, we are, even it would make a cryptocurrency enthusiast even blush. It is, they're trying to, it trades like it solved world hunger, world peace, and even invented teleportation. That's what we're talking about. In reality, it's still trying to convince people that their software is worth more than the GDP of small nations. They trade at 73 times revenue. That's nearly a 400% premium over other AI software companies. The premium creates such high expectations where management's 4%, I think, raised on their guidance for 25 revenue appears a little bit overwhelming, or I should say underwhelming, and tepid. Even when you look at the PE ratio, that's over 300x for what they're currently doing. It's enterprise value to next to 12 months sort of revenue, that sits at around 46x. So it's more than double the next highest again software company. Let me go into the charts because my internal clock is moving.
Are you avoiding the charts here?
Yeah, so let's go into the charts. So I've got the daily chart pulled up here. That's what I'm going to start with. We've got a rising wedge pattern here. Now this is usually seen as a pattern where we look for a bearish reversal coming off of it if we see the break. And we saw quite a significant break off of this tag at the 148 level, coming down to this sort of zone where we see consolidation here now. Now, the big thing about this is this big bearish candle, it serves like an inside bar candle. We're seeing action not really either breaking below or above it at this point, but we're seeing it just sitting in this sort of zone where we are going to be looking to see if it can break below it. The other thing I've also noticed is just for momentum, when we see reversals coming in on this side, is to see what are the indicators showing us. So in RSI, yes, we've hit this overbought territory a few times, but interestingly, there's a bit of a divergence that's also forming here. So while you sort of do have an uptrend, you're seeing this pattern sort of making lower lows and lower highs as well there.
All right, nice debate, gentlemen. Now you got 3 minutes to go at each other. Well, you know what? You just spoke. Let Matt.
Matty?
Matt,
what you got to say?
Kieran had to say. What do you got to say in rebuttal?
So I know you avoided the charts for a little bit. I get it. There's a lot of numbers and fundamentals, and like you said, some of it is secretive. So it's a publicly traded company, but there's a lot of unknowns with this company. But what we do know is the charts. They're right in front of us. And as you mentioned, in recent days we've been kind of chopping. But like if you see that drop that you mentioned, around exiting, if it drops down to around the 110, 115 level, you're going to cap yourself at some risk there. This is a naked put, so there is going to be some risk to the downside if it does go, quite a bit of risk. So if you're not comfortable with that, you could always leg into a spread to kind of like pair off your risk. Something like the 125, it's pretty cheap, so you can make that into a spread, and you can do a 15-point wide spread and bring in roughly. What's the platform saying right now? $6 in premium. Yeah, $6.20. So you're bringing in $6, risking 900. So the risk to reward ratio is pretty decent there, and it's only for a few weeks. So you've got some time to kind of reevaluate if you want to, and roll that trade after earnings, after the wildness happens.
Right, Matt even got the risks in there on what you put on the table in terms of risks. That's always my follow-up, because when they sell their strategies. What do you got for us here? Yeah,
let's talk about the bear trade that someone could do if they're contrarian on the price moves over here. So I've got the chart pulled up. I'm looking at a 4-hour chart. So this is going back into like sort of mid-May to the current price action that we have here. I've got the Fibonacci levels, and Fibonacci levels we look at, Greg, they just show us retracement. So after hitting, you mark the lows and highs, and where you can look at certain levels that are bouncing. Now the key levels for most technicians are going to be your 0.38, 0.5, and 0.618. Now, 0.618 is the key one. That's known as the golden zone or golden ratio, and that's a key retracement level. So now we did see sort of, looking at the chart, we saw Palantir come down to this level, tag it, and then just bounce off of it. But this is a key level that we're looking at again. So the trade that a bear could consider is doing a calendar put spread. So essentially what we're going to be doing in this trade is we're still bearish, so we're going to be buying a longer term put for like August cycle. So I'm going to go actually just outside of the earnings to do this. So we're looking to buy the 15th August 135 put and sell the July 25 dated one, 135 put. So it's the same strike, just two different expiries, which makes the calendar. Now going on to the rationale behind also partly of doing this is going on to the options chain over here. Volatility is kind of in this mid-range, and so whenever we think about is it more conducive to be a seller or versus a buyer, usually if we see volatility may pick up, and it typically will leading to an earnings. That's why we're doing a net debit trade. In other words, we're paying for this trade. So right now this trade is costing us, we're looking to get in about $6 is what the trade would cost us. And so the expectation is we need that move to come down at least to our break-even point, which is at $129 at this point right now.
Things don't go your way, they go Matt's way.
All right.
So what is the risk here?
The risk is obviously, there's a couple of risks because we're dealing with a short option as well. One of the risks is if the stock does move above or stays above 135, we're going to lose the premium that we've paid, which is $6 in this case, or $600. The other point is because we have a shorter dated option at the 135 and it does, let's say, go down, we could have assignment risk. So that means we may have to pick up the shares at that 135. Now, if it's not conducive where we want to buy those shares, it could also mean that we have to buy back that contract at a much higher price. And we still have the long contract as well. This sort of negates it, but there is that assignment risk you have to also consider as well, part of this trade.
Interesting potential strategies there, gentlemen. Thanks for laying out the bull and bear cases for Palantir Technologies. And just a reminder to our viewers that this debate was for educational purposes, does not reflect our personal opinions about the stock. Now, before we move on, Matt, you're going to elaborate on how to assess whether volatility levels are high or low for securities. How do we do that?
Yeah, thanks, Greg. So as kind of here and I have both mentioned, there's quite a few choices that you have. Looking at this chart from Palantir here, we have the relative volatility index. So that's one that you can kind of add as an indicator on the chart, and it'll kind of give you a range, and it'll bounce around up and down. The blue line will kind of tell you where it is. So if it's over the mark here, you'll be at the top of the range. That's going to be relatively high. And if it downs to the bottom, it's going to be relatively low. As you see with Palantir, it's been kind of right around that line. I know that some studies will say it's in the middle. Another way you can look at it is going through the options chain and looking at the options statistics. So if we look at it for today, right now, implied volatility is around 71% for Palantir. Looking at the historical numbers, looking at, has here instead, not quite the highs, but still trending towards the top of the range. And then the option chain is another place that you can go in terms of like the individual strike prices. So if we open up one of the strike prices here, for the chains, you'll see that there's going to be in a column for implied volatility that you can have, and it'll kind of give you that individual weekly expiration date kind of view. As we saw with earnings coming up, if you look at August, interestingly enough here, there's 56% implied volatility on the puts around at the money right now. But if we just jump 1 week, that jumps up to 71%. And that's because of earnings and how volatile it is.
All right, fascinating stuff. Another powerful tool on the platform. If you have a question about the TD Active Trader platform, or if there's a stock you want to see our debaters go head-to-head on, just send us an email, td.activetraderlive@td.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It's going to take you to our TD Active Trader Live website. And if you can't join us live, be sure to visit our YouTube page. You catch up on all our previous debates. Link is right there at the top. And if you're going to go, don't forget to like and subscribe. All right, before we wrap up, gentlemen, on the radar, what's the focus for the rest of the week, Kieran?
Yeah, quite an interesting week, of course, Greg. Tariff talks are going to be dominating this week until tomorrow. We'll see all those notifications going out. So obviously traders are not happy with the attention back to tariffs, and there's a wave of de-risking that hit the tape across all the market sectors yesterday. We're seeing a little bit of a bounce today, so that'll be a focus for this week. Also tomorrow, FOMC meeting minutes are going to come out. Now, a lot of posturing about what's going to happen with the rates. But traders will be really watching closely for any signs of internal debate over the timing of when the rate cuts are going to happen. Right now, the projection, expectation is it's down to about 5% for July, just with the strong jobs report we came off of. So they're now turning to obviously September, where the next possible rate cut is going to happen. But on the other front, we wanted to focus on Bombardier. I'm specifically looking at Class B shares that we have here. They've had a bit of a few news headlines that have kind of propped up the price. And they do have earnings coming on July 31st as well. Now, one of the big things I wanted to focus, for those who are not aware of Bombardier, this is a Canadian-based company which designs, builds, and maintains aircraft for people, businesses, governments, and militaries. They're famous for obviously their premium jet business, global jets.
Private jet, if you can afford one.
If you can afford one, exactly. So the Global and Challenger series are the two sort of namesakes that they have. But they are also in the news because a certain bill that just passed this week through Senate and the House and got signed on July 4th has a clause in there about a permanent restoration of the 100% bonus depreciation federal law, which allows businesses essentially to write off the full amount of qualifying items in the year of purchase. Now, it's often associated with big ticket purchases, in this case, of course, premium jets. And that allows the buyer essentially to write off the full cost upfront in the year it gets purchased. Now, the last time when it was first enacted, this led to sort of a boom in jet sales. And even this time around, like we should see with this sort of having a permanence now, what that could mean. Now, Bombardier, in fact, 82% of their revenue is derived from these premium jets. So that's what we're looking at. They also just come off hot off the heels of a big order, 1.7 billion commitment on a...
the buyer wants to remain unnamed
anonymous.
At the moment.
It's the first-time buyer, yeah. Anonymous with purchase options for up to $4 billion additionally as well. So the total value is at $4 billion. So what we're looking at the charts, and it's so small, I got to do this because of the sort of the huge run-up that it's had. So one of the interesting things that it started this run after sort of that news. We saw the bottoming in sort of late March, and then starting to pick up from there. We saw this huge push after that big announcement that they made with the order that they have, and this has pushed it into new territories. This resistance of 105, this is broken almost like it's going back 10 years. The next level that we would look at is 125, which is about 15 years back now, Greg. So it's really getting up to those levels again. One of the big bullish also drivers was we saw this double bottom pattern, and it's usually symbolic of like a W, and W's usually mean like a win. And so you see that move already play out. So these are the key levels. 105 is the kind of the level that we should see it resist at. It is kind of breaking below the high it reached as of yesterday. But going into this earnings print, it will be interesting to see if it has further momentum push into that 125 level, or if it comes down, breaks below. We next see a next support at 80 coming down there, but it's still holding its 3-year uptrend, or it's broken above its 3-year uptrend, and it's finally back in sort of the green, if you will.
Very interesting stuff from Bombardier. What you got your eyes on there, Matt?
So I'm similarly aligned. We're looking at Delta, DAL, Delta Airlines. The stock has earnings coming up on the 10th, and the stock price itself is in a kind of interesting area, and earnings could be a catalyst for a move. If we look at the chart here, we've got some Bollinger Bands. You can see them kind of tightening up as we get closer to today. And typically when you have those bands tighten, that's volatility contracting, that's a big price move being digested by the markets, and it trades a little bit sideways. And then it's like a spring, so when you compress it down, eventually all that energy has to go somewhere. And right now the bulls and bears are tugging back and forth, and we'll see who wins. Right now it's trending towards the bull side, and if the bulls win, I'm looking at this break here of the previous highs at around 53.63. And once we clear that air, there's clear at about $66, which is the previous high way back in March, February of this year. Looking at the kind of announcements, the previous announcement that they had here in April, there was roughly a $4 move, and that's kind of what the options chain is telling us as well. So if we look at the at the money kind of trade here of the call and the put, so the straddle at 51, looking at about 360, 370, that's what the market's pricing is our expected move from now until the end of Friday, which is going to be the earnings. So given that, that will push us above this trend line here if it is to the upside. If it's to the downside, we're going to be kind of down towards the bottom of this Bollinger Band, so still within the range, not quite out of it. But the bull side is pretty much more the interesting case, and that's to Hiren's kind of point. With the earnings and this now bill being able to write off assets at 100% depreciation right away, maybe Delta kind of takes advantage of that too and has some forward-looking statements in their earnings announcement.
Interesting stuff. I'll be watching Delta because little thing, now that you're part of the family here, after we debate a name and then you get the earnings, and then if it's a big stock move, I come in the morning, I take a picture of the TV thing and I send a message chirping whoever's going to get chirped who was on the wrong side of that debate. Great debut, Matt. Hope you enjoyed it and hope you join us again sometime.
Good time.
Yeah. Right.
We'll see who wins.
We'll get you back in August.
Exactly. You either gloat or put your head down. That's our show for this week. As always, investors should perform their own due diligence before trading. Thanks for watching.